This is Daniela Camboni for Kitco News, and we have a new episode of Reset coming up. All right, Vince, I would like to say nice to see you, but I can't this week. You joined me on the line.
That's true, you cannot, and then neither can I. But good morning to you.
And it almost feels more like an episode of Technically Speaking because you've brought with you today 3 charts that we'll be looking at. Vince, let's start with the first one, the 60-minute chart. Let's look at what's been happening with gold earlier this morning.
Well, the reason we're going technical today is because we're trying to avoid the 4-letter word across the Atlantic. So we're just going to work with some charts here today because they are telling a nice little tale about what's going on in the market. If you look at the 60-minute chart that I sent you, you'll notice there's an oval circling some tails. Now, that is basically an hourly candlestick, and whenever you see long wicks or tails, you see that means that implies strong support or impulsive buying that's going to push the market away from it. In fact, if you look a little bit further back, you see near the top of the market 4 or 5 wicks that are very long on the top, and that also signaled on an hourly chart, that signaled a top. So what we're looking at here is we're looking at 3 or 4 of these long candle wicks on an hourly chart that to us signal there's some strong buying down there. And in fact, the market has rallied over $10 since this chart was generated. So there is some buying down there. That's a very good sign, and the hourly chart shows it. So we're friendly to the market, especially today.
So is the market overbought then, Vince, if we move on over and now look at the daily chart?
Well, looking at the daily chart, that's right. Looking at the daily chart, you'll see the stochastics at the bottom are both in the overbought territory. Now, wise technicians would tell you to beware of getting long a market that's in the overbought territory, and that's true. But bear in mind that these indicators are lagging indicators, not leading. So if you're using this as a reason to get short or bearish, you would be mistaken, because if you look back about 2 months, the stochastics bounced off the highs for a while the market was rallying. So stochastics in and of themselves aren't a good indicator of overbought or oversold. They are a good warning indicator. But on this chart, in combination with the stochastics, it does give us warning. We've been talking about for the last, 2 weeks about above 32. We're friendly to the market. We do believe there's a lot of congestion between 32 and 80, and then above 80 we could run. We decided to give you that in a picture today. If you look on the far left, you have an oval, and that oval is previous congestion in the area that we're talking about. And if you look at the little rectangle that we've drawn there, that's where we are now. We broke above 32, which happened to be the 200-day moving average at the time, and now we're working around between 32 and 65, it looks like. We said that you should scale selling between 50 and 65, and the next target would be 78 or 80, which is essentially where the 50-day moving average is, which is the most important moving average for gold, despite everyone talking about the 200-day.
All right, so if we move on over to the weekly chart now, Vince, does the situation seem less riskier?
Right. To compare and contrast, the daily chart would say, I'm comfortable being long above 32, I'm comfortable selling between 55 and 75, and I'm not really that interested in this market until it gets above 80 again, and if it goes below 32, I'm scared to death. However, if you look at the weekly chart says none of the above. The weekly chart says we've had a massive sell-off, we've had a healthy recovery, and we're nowhere near the overbought territory. You should be very comfortable with this weekly chart saying that pullbacks are to be bought above the previous week's high, which I cannot see at the moment, but it looks to be in the 32 area. The only caveat is the line above that we've drawn down. That is a downwardly sloping trend line, and that line happens to coincide with the 50-day moving average. So once again, if you're a momentum player, this is not the market for you until we get above 1680. If you are a person who's buying dips to sell rallies or selling rallies to buy dips, this is the market for you right now. But overall, it looks very. It's starting to look very positive for the market as a whole, considering the end of the world to the bull market and everyone talking about it.
Vince, what would move us beyond 80?
Well, events in that area across the Atlantic, dominated by French and German-speaking people, and the Iranian situation blowing up in our faces. But if you want to talk about it in terms of currencies, quite simply, another massive flight to safety would do that. And the reason I say that there is room, even though I talk about the range, and you asked that question, it's a good question because despite this rally, gold open interest hasn't gone up, which means gold open interest could explode on an upside move. You could have that $50 to $100 move, but it would coincide most likely with an increase in open interest. So the possibility remains, and the bullets are out there for people to put money into gold if they so desire.
All right, Vince, with the time we have left, let's look at silver. What do investors do with this metal?
Okay. We didn't give you any silver charts because it's a no-brainer. Right now, we feel that if you're bullish gold, you're more bullish silver. The one chart that we are looking at closely is our momentum chart, and the market in the next 48 hours is setting up for a significant move higher, or a rejection of that and a move lower. But the point is, if you're bullish on gold, we like silver better right now. We think the risk-reward is better for silver. It's coming from a lower place, relatively speaking, and it's done a lot more work in the lower areas. And it benefits from economic turnarounds as well.
All right, Vince, thanks so much. I hope I'll see you next week.
That's right. I hope to see you next week.
And thank you for watching Kitco News. As always, you can email me at newsfeedback@kitco.com. For Kitco News, I'm Daniela Camboni.